Let's start with chapter 10. You go through the question. It's a very not a lengthy question, but yeah, a lot of things are there. Please go through this first. Go through question 1. Go through the question. Okay. SM Private Limited manufactured their products in 3 consecutive processes. Details are as follows. Process A transfers 60% to next process. Balance 40% is transferred to warehouse for selling. Process B 50-50. Process C 100%. In each process, there is a weight loss of 2% and scrap of 8%. See, normally we will have one item called as normal loss. Here you have two losses. Normal loss 1, which is 2%. Normal loss 2, which is 8%. Why we have to distinguish? Because scrap, you have a realizable value. Weight loss, you cannot have a realizable value because that is not there. Weight loss, you are not able to find that product. Scrap, you have a realizable value. Weight loss, you will not have a realizable value. Cost is given. 1,000 tons is used in process A. Rate per ton, direct wages, direct expenses. Process account A, B, and C. Calculate the cost per ton at each process. We are required to calculate the cost per ton of each process. Now the question has just asked for cost per ton. They have not asked for abnormal loss account, normal loss. All that is not asked in the question. This question is non-equivalent units. Why non-equivalent units? Because there is no degree of completion. So only two steps. Step 1 input output statement. Step 2 process account. What is the cost per unit? Cost per unit is equal to debit side of process account minus sale value of normal loss divided by expected output. We divide by expected output. Let's do first input output statement. Working note 1. Input output statement. Input output statement. Particulars process 1, process 2, process 3. I'll do only process 1 first. I'll come to process 2 and 3 later on because it is better to do it with the process account. It'll be easier to understand. Opening stock, add input, total input, less closing stock, processed production, less normal loss in bracket weight loss, less normal loss in bracket scrap. There are two types of normal loss. Two types of normal loss. This breakup is needed because weight loss, no realizable value. Scrap has realizable value. There is a realizable value for scrap. Expected output, actual output. We'll see if there is an abnormal loss again. I'll write it. Opening stock is 0. Input and process 1 is 1,000. Materials used 1,000. No opening stock given in the question. So we start with 0 opening stock, input 1,000, total input 1,000, no closing stock, processed production 1,000. Weight loss is 2% and scrap is 8%. Weight loss 2%, scrap is 8%, expected output is 900. The actual output is not given in the question. If they don't give, our assumption is there is no abnormal loss, no abnormal gain. I can't do anything because the actual output is missing in the problem. Or they indirectly want to say there is no abnormal loss gain. So actual is 900, no abnormal loss gain. Abnormal loss gain is 0. 900 is the actual output. I'll come to process 2 in some time. Process 1 account. Particulars amount, units amount. Particulars units amount. You keep doing this. I'll be back in some 2-3 minutes. You keep doing this. Process 1 account. Particulars units amount. Particulars units amount. I'm not writing opening stock and all. To material. 1000 units. Value is 20,000. 1000, 20,000. To direct wages. 4,000. To direct expenses. 3160. By normal loss. 2%. 20 units. No value for this. This is the weight loss portion. This is the weight loss part. By normal loss again. This is weight loss. And there's a second segment which is your scrap. Scrap as a realizable value. 80 and 2. Now, whatever 900 units we have produced, the question says that you are going to transfer 60% to process B. balance will go to warehouse. So buy process B 540 units and buy FG control 60% to process B and balance to FG 540 and 360. No abnormal loss, no abnormal gain. Process A account total unit should get tallied at this stage. Process A account. Let me know if there are doubts here. There are two parts to the normal loss. One is the weight loss on which there is no realizable value, and second is a scrap which has a realizable value. Scrap portion has a realizable value. Cost per unit is equal to debit side minus sale value of normal loss divided by expected output. Debit side total is 27,160. Normal loss value is 160. Expected output was 900. It will turn out to be 30 per unit. That's the cost per unit in the first process. First process is 30 per unit. 30 per unit. So the account will get tallied 30 per unit. Let me know if there are doubts here. This is the first process. Two types of normal loss. One is a weight loss and second is a scrap loss. Weight loss, no realizable value. Scrap loss has realizable value. I will write process B account and then come to input output statement. There's a reason for that. I can also directly do, but let me do it this way. Process B account. Process B account to process A. To process B account. To process A account. To process A account. To process A account. 540 16,200. Process A 540 and 16,200. And see, if you look at the question, it says materials used. This is not which is transferred from the other process. This is some other material they are using. So there are two materials used in process B. One, process A gives some material. On top of that, in process B, you are adding some other material. You are adding some other material. So that is why I wanted to do the process account debit side. Two material, 260 tons you are adding into 15 rupees. 260 tons we are adding into 15 rupees. One 540 comes from process A. On top of that, another 260 I'm adding materials used in tons. 260. 540 came from the earlier process. 260 additionally I added. I'll fill this process B account in some time. Now, opening stock 0, input 800, total input 800, closing stock 0, process production 800. Opening 0, input is 800. How 800? 540 from the other process and 260 added. 540 from the other process and 260 added. Process A, B and C, sorry. Normal losses, again same 2%. Scrap is this, both are same, no abnormal loss gain. No abnormal loss or gain. Expected and actual is same. $720 is the actual output. Let me know if there are doubts here. 540 plus 260 is added as input. Normal loss, weight loss. Normal loss, scrap. Same calculation. Beyond this, it's very simple. Weight loss and scrap. By, so 720 units you produced, transferred 50% to process C, balance to warehouse. So transferred 50%. So by process C, by FG control. 50, 50, 360, 360 units got tallied. You'll have to get the cost per unit and then complete it. Cost per unit is debit side of process account minus sale value of normal loss divided by expected output. Once that initial adjustment is understood, thereafter it's very simple. No abnormal loss or gain in this question. ₹35. Cost per unit is 35. Debit side of process account minus sale value of normal loss. Cost per unit is 35. Then process C, opening stock 0. We got 360 from the other process. We got 360 from the other process. On top of that, I added another 140 tons. Added another 140 tons. Total input. No opening and closing stock and all. 2% weight loss. 8% scrap. Expected and actual is same. Process C account. You do process C account. Again, just give me a minute's time. You keep doing process C account. Keep doing process C account. This was 500 units. Normal loss 2%, scrap is 8%. Coming to your process C account. To process B, sorry, last account, I think we did not do this into 35 into 35. This is to close the account into 35 into 35. To process B account, double entry posting 360 and 12,600, 360 and 12,600. 140 into 10. Direct wages, expenses 1,340. Normal loss weight 10, 0. Scrap 40 into 6. And this entire thing will go to FG control, warehouse. So the new part in this question is, one is this weight loss part, which doesn't have any realizable value. And second is, in the process, you are adding extra material. So because of which your output is going up. Cost per unit is equal to, cost per unit is equal to 38 per unit. So this is a slightly different type of a question in process costing. Slightly different question in process costing. Any doubts on this, please let me know. Let me know if there are doubts. I hope this is done. If there are doubts, please let me know.